Welcome to the Contrarian Capitalist podcast. I'm delighted to be joined today by Eric Yeung, also known as King Kong 9888 on X. Eric, how are you today?
I'm doing good, Rob. Thank you for having me on your show.
Well, thank you for taking the time to come on. Part of the joy of this is to speak to as many different people as possible, and especially people like yourself that have got so much experience in what we're going to talk about today. And I thought it'd be good to start with a chart that you sent me, and I'll put this on the Substack post that comes with this as well. And it's from the Financial Times, and it's looking at the fact that gold has overtaken or nearly overtaken US Treasuries as central bank reserve asset in terms of the amount that's held. Eric, why is this so important, and why are not many people paying attention to this at the moment?
So, so that chart is actually from the Financial Times, and it's saying that the global central bank's holdings of physical gold is just about to revert, back to historical norms, where it's going to be the primary reserve asset of global central banks. So they're saying it's just over in the process of in the middle of overtaking US treasuries. So for 30 years, US treasuries took the crown. It has been the number one reserve asset of global central banks. And now gold is back, soon to be, according to the Financial Times, as number one. Now, that's a very good question you asked, Rob. Why is it important? Well, the way that the for lack of a better word, the way that the US empire operates.
Mhm.
In fact, they are an empire, even though they don't admit it. Outright. They are a, you know, neo-colonial empire-like entity. So what they do is they would um, trade with their trading partners like China, Korea, Japan, Germany, France, UK, Africa, etc. Essentially the entire world with their US dollars. Whether or not they printed it or is in some form of euro dollar that is originated from overseas.
Mhm.
They use these US dollars to purchase goods from these foreign countries, right? So these foreign countries receive these US dollars. What do? They use these US dollars to buy things that they need in the past I'm talking about. Because everybody uses US dollars globally. For example, China would use US dollars to buy equipment from, let's say, Australia. Or Japan would buy raw materials from Africa using these US dollars. And then what would happen to the US dollars that they don't use, like the surplus? That's what we call it, right? The US dollar surplus of these foreign countries. They would recycle all these US dollars back into US Treasury bonds. So what are they essentially doing? They are financing the US government. Because US
Mhm.
Treasury bonds are debt that the US Treasury Department issues on behalf of the US government. So the US, isn't that a wonderful system for the Americans, right? They are printing the dollars. They are sending those printed dollars to the trading partners or the vassals and their, you know, um, countries that may or may not be the competitors, etc., with these US dollars. And not only that, they are financing their government with the excess US dollars that these foreign countries hold. So I don't like to use this word, but it's almost like a perfect Ponzi system. It's like
Mhm.
closed loop where they where the US government essentially reap the benefit of the issuer of the US dollar, which is the international reserve currency, from every level.
Yeah, it's I say it's quite a compelling chart, and I'll put it on the post as well. And so, th- just just looking at this. So, is this showing? Well, let me ask you the question rather than me talk about it. So, what is this chart showing us in terms of the broader picture? Obviously, share of gold is going up quite significantly, and again, people look at the charts; it's gone up quite significantly since 2020. To say the least, and then the proportion of treasuries has gone down quite significantly since 2020 as well. So, what is it? What is this chart telling us, Eric?
What this chart is telling us, Rob, is that the US dollar and US treasuries is losing trust from sovereign countries all over the world post post 2020. And what happened in 2020? The repo crisis, COVID
Mhm.
happened. And then the US Treasury printed an unprecedented amount of US dollars in the trillions. In fact, if you look at the US debt chart, it just went parabolic. We are sitting at $37 trillion of US national debt right now and climbing. By the time your program airs, we're probably going to be at 38 trillion. That's how
Mm.
crazy it is. I mean, it sounds crazy, doesn't it? We're talking about
Yeah.
trillions of dollars. And by the time the program airs, we're probably at 38, right? So
Mhm.
it's pretty crazy. Anyway, um, my point being that you know, the US dollar debt is exponential.
Mhm.
And trading partners of the US, whether or not they are friendly or adversaries, have they're smarter than me and you, obviously. They have like top-notch economists running the show at their central banks. I'm talking about the global sovereigns. Now, they probably saw um, what's coming, which is the US unable to service its ballooning parabolic debt situation. So what did they do? They started reducing their US Treasury bond holdings and diversified into physical gold. That was 2020 and 2021. Now, what happened in 2022? Wait a second. 2022, that's when the Russian special military operation in Ukraine started.
Mhm.
And what did that kick off? Well, when Russia did that, the US and the EU froze Russian assets in the form of euros and US dollars. And then what happened after that? What happened after that is that all the other sovereign countries who may or may not be friendly to the US is looking at that and they're thinking to themselves, Rob, if the US can do this to Russia, push a button and freeze Russia's US dollar denominated assets, they can do
Mhm.
the same thing to us. So they have no choice. They had to reduce their US Treasury holdings after 2022 and then accelerate the rate and get into physical gold. And that is exactly what we are seeing with the Financial Times chart. It accelerated. You see that, almost like a parabolic curve
Mhm.
of global central banks' physical gold holdings going up. That's what happened.
That leads me nicely into the second chart and also the second thing to talk about, and that is gold itself. Again, I'll put the following chart on the post as well, and that was SGE gold delivery volume. So again, Eric, if you can, just walk us through that chart and what we're seeing, and then go on to then we can start talking about China. Because I know that we get fed a lot of BS over here in the West about what's going on with trade surpluses and deficits. But let's look at the chart first, and then let's go on to talk about China, if that's okay with you.
So there's a lot of noise, Rob, on YouTube from the people who want to see China to fail,
Mm.
or maybe they're paid in the Western intelligence as assets, right? And they're saying China doesn't have any gold. China is running out of gold, stuff like that. Ridiculous headlines. And what this chart shows you of the Shanghai Gold Exchange is that in 2025, China is on its way to deliver 1,450 metric tons of physical gold at the SGE, Shanghai Gold Exchange.
Mhm.
What does that mean, though, Rob? Now, let me tell you this. China has delivered this around the same amount of gold to the authorized participants at the SGE for the last 3 years. Around the same 1,400 to 1,450 metric tons of physical gold. Now, why is that important? It's important, Rob, because the price of gold during that time frame almost doubled,
Mm.
as we know. It went from below
Yeah.
$2,000 to where we are today. So what does that tell you? That tells you that the authorized participants in China at the SGE is spending almost double the money for the same amount of gold. So that means that the Chinese thirst for physical gold is actually increasing in dollar terms and RMB yen terms.
Mhm. It's quite a compelling chart to say the least. And again, you can just see going back from I think it's late March, April, I believe. You can just see it increasing gradually. It is a pretty incredible chart. Obviously, that tells us that about China's thirst for gold, and I understand that. Again, it links back to the trust issue that you highlighted a- about 5, 10 minutes ago. There's a lot of, again, talk and chatter, not just YouTube but on X as well, about what's going on in China. And again, looking at things like trade deficits, trade surpluses. You're a person that likes to get straight to the point and cut through all the nonsense, and there's a lot of it on there. So what do you see, and what can you tell us about what's going on in China and maybe in Asia in general with regards to both gold and silver?
So I think, with the trade war going on, China is going through a metamorphosis. What I mean by that, Rob, is that China, in last year in 2024, China had almost $1 trillion or US dollars of trade surplus. And it looks like, just from the data that I'm getting right now, it looks like this year is going to be around the same, around the trillion. And so why do I say China is going through a metamorphosis? Well, the US trade with China is approximately 15 to 18% of that entire trade surplus that we're talking about here. The rest of it is the rest of the world. Now, believe it or not, the US trade with China peaked at around 45%, almost 50%. So it dropped significantly over the years, especially, of course, after Trump trade war #1 during
Mhm.
Trump first term, right? So that dropped, and we're now sitting at around 18. So what I'm seeing is that China is trying really hard to take that manufacturing capacity and increase its domestic consumption and also trade more with other international trading partners. Now, I know a lot of trolls say that Eric is just, it's bullocks. Eric is just blowing hot air. Doesn't, like, this is meaningless. Okay. So guess what? Donald Trump, just this week, is trying to get the Europeans, the EU, to impose 100% tariff on China. So Donald Trump is proving my point. Because Donald Trump is saying, well, if China wants to bypass the US and redirect its manufacturing capacity to other countries like the EU, we will go to the EU and strong arm the EU to slap tons of tariffs on China. So anyway, so what does China do on top of this to get away or insulate itself from the wrath of the US and Donald Trump? The answer is that, as you saw on the chart, the first chart with the global central banks holdings of physical gold, China is essentially no longer net adding new US treasuries. China is net adding a lot of physical gold, which means that whatever US dollars that China is making is no longer recycling it into US Treasury bonds. It is buying physical gold with it. So essentially, that's almost like a short on the US Treasury bonds, but a long on physical gold.
Which does make a lot of sense, given again going back to not just the trust issue, but I think all the other, financial challenges, shall we say, that we're seeing at the moment. Eric, just while we're in that area, because I know that you've written about Hong Kong as well, and you've termed, I believe, the term economic losers. Uh, People saying that Hong Kong, is dead in the water, and it's going to fail, etc. But I also see that on a post that you reposted on X, also Hong Kong's ranking number 4 in the world for talent ranking. So actually, again, the perception that we might get in the West is that, not a lot's happening over in Asia and things are stagnating. But actually, from what I'm seeing, it's a completely different story over there at the moment. Is that right?
I think what's happening, Rob, is again China, and also in not as much, but an extension of China. Hong Kong is also going through a metamorphosis. So
Mhm.
Hong Kong in the past really is a buffer zone for China to deal with the West, like the US, UK. It used to be a UK colony, so the UK, the US, Europe, etc. But what is happening now is that China is trying to reshape Hong Kong as a hub, not only to service the West, but also to service its global South partners like
Mhm.
India, Russia, South America, Saudi Arabia, etc. So that's why recently what China did is very interesting. China established the first offshore gold and silver vault in Hong Kong. Well, mainly gold for now. Um, the which is it is part of the SGE, but the vault is located in Hong Kong.
Mhm.
So what does that do? That means that if you, let's say, are a trading partner of China, you can settle your currency surplus, deficit, etc., in Hong Kong, and then you can convert part of that into physical gold in Hong Kong, which has a set of different laws than China. And also, Hong Kong doesn't have any, um, you know, uh, capital um, flow limitations. So Hong Kong doesn't have any capital controls on these foreign trading partners of China.
Mhm. So, in effect, what they're doing, just to make sure I've got this right in my head, is that they are effectively using Hong Kong as what could be like a super hub in order to support both themselves and the rest of the world in terms of China's strategic interests. Is that about correct?
Correct. So I think the West is retreating a bit in Hong Kong, but eventually they'll come back for business because once this um, experiment, which I think is going to be successful, becomes successful, then the Western companies, the Western financial institutions will send a lot more people back to Hong Kong. So whatever we're seeing right now, like your friends might be saying it's stagnating, they're moving people back to the States, to London. Well, I think eventually this situation will revert and Hong Kong will be a very vibrant city where global partners of China and also potential, adversaries or neutral parties can meet together in Hong Kong and do business.
Certainly a case of watch this space. And thank you for highlighting that. Again, the reason for asking that question is we get fed a lot of, yeah, well, there's a lot of BS going around the world in general, but I think that the conception or the perception, sorry, is that, things aren't overly too well over there, but actually you've said actually they're doing quite well, which is good. So thank you for highlighting that, Eric. Just I want to go back to a post that you put on X actually a couple of years ago, and there's a term in there that I'm not familiar with that I'm hoping you could explain. And it was a post from May 2023, and and you said, and I quote, "The slamming will be relentless. The paper ride along boys will be kicked out in the gold and silver Hacksaw Mountain." You then on September the 9th retweeted that with Hacksaw Mountain and a winking emoji. Dive into that term if you can. What do you mean by hacksaw mountain? And again, what's going on in the paper markets and why do people need to be very cautious if they're in the paper side of gold and silver?
So basically, the way the West controls the silver is through a system where it directs physical gold and silver um, to three different places. Or these three different places, can direct physical gold and silver to each other. So you have the COMEX, which is the futures exchange located in New York. You have the LBMA, which, as we all know, is located in London. And that's supposedly the spot market. Local London is supposed to be the spot market for physical gold and silver. And then you have the ETFs like GLD and SLV, where interestingly enough, they share the same vault as the COMEX and the LBMA. So basically, the powers that play here, they would wherever they lack physical gold and silver, they would send the physical gold and silver from whichever vault to the place where it's lacking. So that's how it works. And I'll give you an example. I
Mhm.
I have explained this to people many times. So for example, when people see like the 9:30 morning slams, that's what we call it, price slams of gold and silver. That's 9:30 a.m. Eastern Standard Time or Eastern Daytime in New York time.
Mhm.
New York opens, they slam it. So what that means is that the authorized participant has bought a whole bunch of shorts. In some cases, like a year supply of mining production. In 1 hour, they were shorted. Isn't that crazy, Rod? So
Yeah.
when they do that, what they do? They are shorting on the COMEX, but they are hedging that short at the LBMA with supposedly physical contracts. But believe it or not, those LBMA contracts, those physical contracts, something like only 1% of it is ever physically delivered. I mean, we don't know the exact size of the paper saturation that there is at the LBMA because it's bilateral, which means that they don't have no obligation of making that information public at the LBMA. So we don't know how many paper contracts they are floating around at the LBMA. But the fact is, you see, they're using this system to suppress the prices of gold and silver when they see fit. So
Mhm.
now when I say the hacksaw mountain, that's what I mean. I mean, like, every morning they will slam the prices of gold and silver. So if you are a gold and silver investor and you believe in the long-term fundamentals of physical gold and silver, you have to climb a mountain that is essentially like a hacksaw. It's going to cut into you every single morning when these shadowy figures slam the price of gold and silver. That's what that means.
I appreciate you explaining that. Thank you. That makes it a lot clearer to me and hopefully to people listening as well. In terms of gold and silver, let's stick on the theme while we can, and everyone seems to have different thoughts on this. In terms of all the shenanigans going on at the moment, where do you think gold and silver are ultimately going to go and why?
Well, Rob, look at what's happening around us. Donald Trump threatened India. India's Minister of Finance came out and said that they are now officially reducing US Treasury holdings and increasing physical gold holdings. So that happened last week. And then look at what happened today. The EU is saying that, or Poland is saying, that Russia has sent drones to its airspace. I mean, the official story is that the drones are supposed to go to Ukraine, but they pass through the Polish airspace. But my point, Rob, is that there's a lot of hotspots in the world, whether or
Mhm.
not it's genetic or economic. And the primary beneficiaries of these situations are physical gold and silver because they are the things that people trust. I mean, for example, physical gold has been money for over 5,000 years in human civilization. So, in an era where trust is being lost, physical gold's value is going to be revalued to this new reality.
So ultimately, and I'm sure again, many people listening to this are well attuned with gold, silver, miners, and geopolitical issues. The only reason I asked was to get your opinion on it, Eric. Ultimately, it's got a lot of room to run, and we're only at the start, given all the hotspots that we're seeing around the world at the moment.
Absolutely, Rob. I think we're just getting started. Look at silver is at $40 right now,
Mm.
approximately, like over 40. And the last time it was at this level, I believe, was in 2011, and then
Mm.
again probably 2012. But correct me if I'm wrong, around that area. But this time it looks like it's a lot more sustainable because the last time it was there, I believe it only stayed there for 2 months in total. So if we stick around here at this level for silver for over 2 months, we already exceeded um, the longest time period in history where silver is above $40. In terms of gold, need I say more? We are making new highs for physical gold in terms of USD price, almost on a weekly basis, and soon on a daily basis. So I think both gold and silver has a lot more room to go, especially if global liquidity is still on the upside. So I think that's what we really got to watch, and look at, is to make sure that global liquidity is not in contraction. Now, if global liquidity turns around and contract, something like a smaller version of March 2020 may actually happen. You get a global US dollar liquidity squeeze.
Mm.
After all, the world is still, look at the FT charts. The world is still, to be fair, half physical gold and half US Treasury bonds, right? So,
Mm.
I'm just looking at, Financial Times' data. Now, if we take that as a reference, that means that if the liquidity contraction happens, the physical gold price in terms of US dollars may still correct to a certain extent. And then silver price in US dollars will have a even bigger correction because silver is a magnified version of gold in terms of like price fluctuations, and then your miners will correct even more. But if the US manages and the world and the rest of the world manages to keep liquidity up, I think something like the period between 1972 and 1974 may actually happen. We might get a rotation of capital from the tech stocks, US tech stocks,
Mm.
to gold, silver, and miners. And if that's the case, then we'll get a bull market for physical gold, silver, and miners that it's going to be this bull market is going to be so huge that even me and you will be surprised, Rob. That's what I think.
I certainly hope so. I say that from a selfish point of view in terms of holdings, especially in terms of silver. I have to say, there's so many different reasons. Obviously, you've highlighted a couple of really good ones there, and also in silver, we're seeing just a general deficit in the physical market as well. So, I mean, that, economics 101, simple supply and demand tells you that, really that price has got to go higher anyway. And that's just from that alone. Eric, I know that you, again, I'll link to the retweets and so forth, everything that I'm mentioning. I know that your friend Parallel Mike was looking into Michael Saylor and Bitcoin a little bit, and he was highlighting that the move into Bitcoin, along with El Salvador's move into Bitcoin, were done at the behest of the US deep state. That's something that you retweeted. If you can, dive into uh, a bit on that and also your general thoughts on Bitcoin for the audience, please.
Okay, well, like I don't want to anger anybody or any of your followers, but I'm just going to give it to them straight on
Mhm.
my perspective or my what I think about Bitcoin. I think Bitcoin is simply a digital liquidity sink for the US dollar. It's probably invented by the NSA or the CIA or some sort of intelligence apparatus of the West, primarily the US. And like I said, liquidity sink. So what does it do? Essentially, what it does is it sucks up the excess liquidity when the US government prints a lot of money. So if you look at it from that perspective, Rob, Bitcoin, I should say, is the best bang for buck US intelligence operations since the inception of these US intelligence apparatus, right? Best bang for buck. Look at what happened in 2020 after they printed trillions. Inflation went up, yeah, sure. But imagine if Bitcoin and crypto did not exist. Imagine if if Bitcoin didn't exist. A lot of those capital, a lot of that liquidity that the US government printed would have went into gold, silver, and commodities and raw materials.
Hmm.
And then inflation would just go parabolic. But instead of that, a lot of that liquidity went to Bitcoin and cryptos. Therefore, inflation still went up by a lot, but not to the point of Weimar Germany. Okay. So that's
Yes.
like, in my opinion, is a lever that the West or the American empire uses to control liquidity flows. That's what, that's the real purpose of Bitcoin. That's what it is.
Do you think then that, again, just going back to what Parallel Mike said, and again, he said that, and I quote, his move into Bitcoin along with El Salvador's were done at the behest of the US deep state, end quote. Do you think then that might explain why El Salvador recently purchased, was it 50 billion, I think, of $50 billion worth of physical gold? Do you reckon that the president of El Salvador can, he's trying to balance something there, or do you reckon there are some other significant undertones involved in that story?
Well, Rob, not only that, Tether, Tether, right?
Hmm.
Tether is the like issues the stablecoin, USD stablecoin, is buying physical gold. It's just announced that. So isn't that insane? Tether is doing that. El Salvador is doing that. Why is that? I tell you why that is. Because they see that the tide of physical gold returning to be the global reserve asset of the majority of these sovereign nations around the world is unstoppable. So either you have it or you don't. If you have it, then you belong to the adults table. You have some chips to play. If you don't have any physical gold, then you go to the kiddie table. The kiddie table where they play with the crypto, right?
Hmm.
So one interesting observation, Rob, is that all the global South countries like China, India, etc., the state, like the governments of those countries, they do not accumulate crypto or Bitcoin as their primary reserve asset. So what that means is that if the US, continue on this path to push crypto, stable coins, Bitcoin, etc., they are just playing in their own pool, right? With their own kiddie pool buddies, but the rest of the world is stonewalling around that kiddie pool. That is what's happening.
I guess that would also explain why countries such as the aforementioned Poland and the Netherlands, even countries like that, are increasing their physical gold holdings significantly as well. It's not just over, in China and in Asia in general. Eric, we've covered a lot of fantastic subjects today. Obviously, we've just looked at Bitcoin there briefly. We've touched upon gold and silver. We've looked at the overarching picture when it comes to the USA trust and what's going on in Asia. Is there anything that we haven't spoken about that you would like to talk about before we wrap up?
I think, Rob, I just want to tell your audience that if they do not own any physical gold and silver, they should start buying physical gold and silver. And they can do it in a dollar cost average approach where they spread out their purchases over a period of time, over like let's say a month, a year, etc. If they don't feel comfortable in buying all at once. So, but I think people in general should own physical gold and silver because what's going to happen in the next year, 5 years, may shock even the most bullish of us gold and silver stackers.
Just on that, Eric, and again, I just want to bring a bit of balance. First of all, I just want to say that your sentiment is something I agree with 100%. So we're singing from the same hymn sheet. I just want to try and get into the mentality of some listeners that are listening that might not have physical exposure to gold and silver, and they might look at the prices that are, about 3,600, 3,650 US dollars for an ounce of gold, and about 40 to 41 dollars for an ounce of silver at the moment. So again, people might look at that and go, "Well, that's too high. I'm going to wait for that to pull back." So again, would the advice be the same? Just dollar cost average in and and thank yourself in 5 years' time. What would you say to people that are sort of fence sitting because they're looking at the price at the moment?
If people are fence sitting, I would say, just buy more physical silver. Buy some gold, but buy more physical silver simply because silver is, like you said, Rob, is at around $40. It's still below the 1980 high, which is like 45 years ago. So we are at below 45 years ago. So I think yeah, buy maybe more silver and less physical gold. And if you are agitated, you think, hey, if I don't buy now, I might miss the train. Fine, then buy now. But if you feel that you want to dollar cost average, because you don't know if we're going to go sideways for another 6 months, right? That's also a good approach. So I think the fact that price of silver is so cheap
Hmm.
is people's answer right there. So they can look at gold and say 3,600 too expensive, but silver, no excuse for silver. For $40 is so cheap. There you
Yeah,
have it.
it's
Yeah.
amazing looking at that chart to say the least. It's yeah, it's still 20 what 20 be 20 25% off its high back in 1980. It makes no sense whatsoever. Eric, I really appreciate that. And again, it's a sentiment I agree with. And again, I'd say to people, always go and do your own homework before making decisions that work for you. Uh, I would like to give people the opportunity to say how people can get in touch with you. So if people want to follow your work, Eric, and follow you, how do they do that?
So they can find me on X, Rob. My X handle is at King Kong 9888. So King Kong 9888 on X.
Perfect. I do say to people, do go and give Eric a follow. It is a very good account with a lot of fantastic information on there. Eric, a massive thank you for your time. I'm glad that we've covered a couple of topics that are not normally covered. So that again, that's just a part of the channel. And I just want to say a massive thank you again for your time. And hopefully we could catch up in 2026 and see what's going on then.
Thank you, Rob. It's a pleasure.